Smart Trade. Here at Forex Smart Trade, our mission is to kind of make you the best version of yourself. Hold on here. We're having just a bit of technical difficulty. Hey, good morning, everyone. Sorry for that. We're just having a bit of technical difficulty. I think I've got it under control now. Paul McMann here with Forex Smart Trade. Our mission is to help you become financially independent, and we do that by teaching you how to currency trade with our proprietary, accurate trading indicators. In this session, I am going to focus on one or maybe two of the signals that we have. We've got a dozen signals, and as we train you, we go over the signals and develop a trade plan that kind of resonates with your personality. So with that, let's just jump in and get going. We first need to listen to this guy. So let's start with that.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
One of the things that makes our program terrific is that we do these live trades. If you are a light or a visitor, you've got access to what's in the yellow. We do two morning trades this morning, Thursday and Tuesday morning. I'm sorry about Tuesday morning. I had internet problems for whatever reason. I don't know, something happened, and my internet wasn't working at 6:30 in the morning. So we've since got it fixed. When you become a regular member, we do a trade in the morning. We do a trade in the evening. We have extra paid trade sessions. So there is lots of opportunities. Historically, on these live trades, we net about 150 pips a week. So it's being able to watch an experienced trader trade and him go through his analysis is a good teaching moment and helps you improve and gives you the opportunity to ask questions. With that, I like to trade off of a trade routine, and that trade routine is basically before I get started, I make sure everything is running every day. And historically, I used to just leave the green charts on all the time. Now I do shut them down and turn them back on so that the memory is fresh. So I don't get any glitches with the charts freezing. And since I've been doing that, it's been working pretty well. Like to review at the end of the day any missed trades so I can try to figure out what happened that I did wrong. It's good for trading and both life to do a little audit every day in terms of what could I have done better and improved on. Monday we took a trade and it successfully closed, so we're not going to go back. As we are technical traders, which means we are trading based off of the price action, and our tools are very, very good at being able to help us determine the direction. We want to know what news that might impact currency pairs is happening. So we do that by taking a look at forexfactory.com, and it breaks news down into 3 categories. Yellow is low impact, orange is medium impact, and red is high impact. And I want to stay away from trading anything that has red in it. And I like to be out of it at least 2 hours beforehand. So at 8 a.m. there's going to be some news on the pound. So we will not trade the pound this morning. And then we've got kind of clear sailing the rest of the way. A little bit of orange. Some people say when there's 2 oranges, they consider that a red. I don't follow that. But just for you to know. All right. So with that, let us get into our trade. The chart I am going to use is one of the standard charts. It is the light 6 major. I call it the composite chart because it's showing us 6 different currency pairs, all on a 1 hour chart. And on this first chart, they're all U.S. based pairs. And the trade I am going to use is something called the 10-point trade. And on a 1 hour chart, it's usually good for anywhere from 5 to 35 pips. So I start with the middle section of the chart, the majors and minors. And this horizontal blue line is the overbought line. And this horizontal red line is the oversold line. So when these lines are above the blue line, that's the beginning of a sell signal. The market's overbought, and it may be a buying opportunity. Likewise, the reverse is true when the lines are down below the red line. And I am now specifically looking for a situation where we are overbought and the lines are all coming down. So I don't have that here with the Australian US dollar. So if I don't have that, if I don't either have the overbought with the lines going down or the oversold with the lines going up, I'm going to pass. Euro USD, we were overbought. All the lines are coming down. And for me, the green line here on the majors, the red and green lines are the major indicators. The black and gray are the minor indicators. If the green line on the major indicators is more than halfway, I pass on it. I am looking to catch the run up here and then run it, catch the move through the channel. When we're halfway, I don't know how much is left, so I pass on it. Pound USD, we've got disagreements here. It looks like whatever the pound news is the majors are starting to go up. Miners are kind of down all the way through the channel. We're not going to trade this because of the news, but it looks like the pound is going to get stronger with whatever that news is coming out. USD Canadian, we are oversold. Everybody's going up, and I've got what's called a double cross. The green line is crossed over the red, and the gray line is crossed over the black. So I've got 3 points here. We're oversold. Everybody's going up, and the green is on top and the gray is on top. I'm not as concerned that the gray line has gone over the halfway mark. I'm more interested in what the majors are doing. The majors are just about to enter the channel. So I got 3 points here. When I have 3 points here, I am going to go up to my TNTs and count how many of the lines are telling me buy. I'm seeing a buy here. So the two orange lines are going up rather steeply. The blue lines are inversely related. So when blue is coming down, that means buy. So 3 of the 4 are telling me buy here. I need a minimum of 3 out of 4 to continue with my analysis of this trade, and I have that. And once I have the 3 here, then I'm going to go down to my pressure, and each of these sections is measuring something different. So when I can get agreement over all 3 sections, I've got a high probability of a good trade. So I've got kind of down pressure, weak down pressure. What makes it weak is the slope of the line isn't that steep, and the lines are separating. And so I've got down pressure, but the green line is on top. With the green line on top, I get a point here. So either if the lines were going up, I'd get a point, but I get a point because the green line is on top. And I like this because the green line, the slope of the green line has changed and it has become less steep. So it looks like it's about to roll and start going up, and these lines are separating. So I've got 7 points here, 3 points here, 3 points here, and 1 point here. When I have 7 points, I want to do a little bit more analysis to see that to confirm the move. And so that little bit more analysis, I'm going to go to a full USD Canadian chart. So I'm going to just go to this second chart that I had open. Let's close this. Let's close this. Let's go back here. Duplicate. All right, we're stalling out again. Still waiting on this guy. So I've opened up a Euro USD chart, which I'm going to now change to a Canadian or USD Canadian. And this chart has 6 different charts on the USD Canadian: a 2-minute, a 30-minute, a 1 hour, a 2 hour, a 4 hour, and a day. And basically what I'm looking for, so here was the 1 hour chart we were just looking at. I am looking to see that on the 2 hour chart, I am getting a confirmation of what I am seeing on the 1 hour chart and also on the 4 hour chart. And what I'm looking for, this is a good signal here on the 2 hour chart, but basically I'm looking to see if we're oversold here, I want to be oversold here and oversold here. And it doesn't necessarily have to be going up like it is here, but what I want to have happen is if we're oversold across the board, if for some reason this stalls out on the 1 hour, that I will pick it up on the 2 or the 4 hour, that everybody's oversold. What I don't want is a situation where I'm oversold here and the 2 hours overbought or the 4 hours overbought. So everybody here is kind of telling me up. This is actually a good signal on the 2 hour. Everybody is clustered together. Everybody's going up. And then on the 4 hour, where everybody is oversold. The minors are going sideways. The majors are starting to go up, sideways, but starting to go up. So across the board, I like this. And interestingly, we've got green on top on all of these, and the lines are diverging. The green line is separating from the red line. So on all accounts, I like this. So now I need to figure out. So the trade to me is a good setup. The question then is, what's it worth? So to figure out what it's worth, I am going to open up just a clean chart where I can look at the candles a little better. So on the clean chart, again, I don't normally trade the Canadian or dollar Canadian. So this is my Euro USD chart. I want to know, again, if we go back to my little checklist here, I want to know what the trend is and where the support and resistance are. I want to know what the trend is and where the support and resistance are. So I've already got support and resistance drawn on my Euro USD chart because that is what I trade all the time. So USD Canadian, we'll open that up. And I am going to crunch this up. So the trend is pretty clear. We're trading into a down trend. When I take a buy into a downtrend, I am going to take less pips than I would if I were taking a buy into an uptrend. The trend, I don't want to trade against the trend because in the long term, I will lose. So I want to know what that trend is. So support and resistance are spots where the candles seem to naturally stop. So it seems to stop in here, stopped in here a little bit, stopped in here a little bit, in here, over here. On the Euro USD chart, and it's probably going to be the same on the USD Canadian. These lines are going to be about 30 pips apart. So right in here it stopped, right in here it stopped, right in here it stopped. And if you see, I'm at 51 to 80, 88. So that's about 37 pips. And this is going to tell me, this is going to help me figure out how many pips I can take on the trade. I'm going to take one above. Let's see here. I think maybe right in here. It stopped it here. Over here, over here, over here. Now I'm going to pull it back out so I can see it better. The reason I squish it up is so that I get more data points to put the lines on. All right, so we're clearly trading into a downtrend. And then I want to know how much room I have to each of these points. So I've got about 21 pips up and 14 pips down. 21 pips up and 14 pips down. So let's, and you know what else I want to know is we're not going to take the whole 21 pips because we're trading against the trend. Where are we at with respect to this little cluster in here? So we can clearly get maybe 10 pips till we start to hit this cluster. So going back, let's just double check that the signal is still there. Sorry, I got a little thing at the top because the streaming that kind of blocks my ability to see everything. So I like the signal, like the signal. We are going to go ahead and take 10 pips on the Canadian USD. So now I'm going to open up. You can do that in your trade simulator, or if you're using MetaTrader 4, I'm going to open up MetaTrader 4. And I do happen to have USD Canadian opened. I was helping somebody the other day and we took a trade. So if you don't have it open on MetaTrader 4, you go to File, New Chart, and then you would look for USD Canadian, which is on the first group here. Then you're going to go to the second row, New Order. I'm going to click New Order. As a new trader, I don't like to use these buttons, so I'm going to hide them. And my volume is going to be a function of how much is in my account. This is a demo account. It's got 8,000 in it. So I'm going to just really move my decimal over 4 spots. If I move my decimals over 4 spots, 1, 2, 3, 4, I'm going to take a lot size of 0.8. With a lot size of 0.8, I can have 2 open trades and not stress my margin. I'm not going to worry about the stop loss or the take profit right now. I just want to get the buy in. So market buy, a lot size of 0.8 on the USD Canadian. I'm going to click market buy. It records it down below here. If I click anywhere along it, right click, it highlights it in blue, and then it brings up this menu, and I'm going to go to modify. And I am going to put 100 points. 100 points is 10 pips, plus the little blue button, and it does the take profit for me. It does the math for the take profit, and we're going to use a 4-to-1 stop loss here. So I'm going for 10. I'm going to put a 40 stop loss in here, and then I'm going to collect. So 40 is 400. I'm going to click the little red button. It does the math for me, and then click modify. And it drops both in. And I like to pull up, make sure I can see the stop loss on there. And we are going to go back to where the clip where it was up in here, where it was trading a few hours ago. So we've taken one trade, a buy on the USD Canadian dollar with a take profit of 1.26770. That's 1.26770. A stop loss of 1.26273. When you see this little light go green, that means we are within 10 pips of the trade closing. So that's good. Likewise, when you see the stop loss go red, that means we are within 10 pips of the trade stopping out. We've got 6 minutes left, so let's see if we can find another trade. On this other trade, I am going to use a more simple signal. I'm going to go back to my 6 light majors. We'll start there. And the signal I'm going to use now is called the thick orange line signal. Thick orange line. So this is a different signal. I'm looking at different things. I am looking at where the thick orange line is. And this thick orange line is a scaled number uh, 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 and it goes from when it's as low as it can go, it's at 0. When it's as high as it is at 10. If it is within 1 point of either end, it is telling us when this is at 10, it is telling us it doesn't think there's any more up in the movement. There's no more up in the movement. It is a good sell. Likewise, if it's at 0, it's telling us it doesn't think there's any more down in the movement. But what we want to do is we don't want to rely just on one piece of information to make that decision. I want something else that confirms it. And ideally, what I want is I want to see all 4 of these lines well above the blue. And they are well above the blue. So if I've got condition 1 and condition 2, this is a good trade. Now, the one caveat to it is all of these lines are where I like to see them, like the red line, especially I'm looking for the position of the red line, and the red line is nice and high. The only problem right now is that you can see the majors have been above the blue line for 6 hours. Each of these candles is an hour, and I've got 1, 2, 3, 4, 5 hours. These lines have been above. I want the lines to have come from the channel and gone up. I don't want them hanging up here, because what happens is when the lines go through the channel and come up, there's a little pressure. You can kind of think of it as a rubber band that you're pulling. And when the candle changes to the next hour, which is going to do in a minute, 50 seconds, that elastic's being let go and there's a snap. When the majors have been up above the blue line, we don't get that snap. And we took one of these trades, I don't know, 2 or 3 weeks ago, and it didn't work. And going back and taking a look at it, it was because of this. So I want to catch it when the lines have crossed through the channel. So we don't have that here, so I'm going to pass. 3 isn't close enough. 2 isn't close enough. 7 isn't close enough. 1 isn't close enough. 0.3 is close enough. 0.3 is close enough. It's within 1 of 0. And I've got all the lines down here. All the lines down here. And they've come through the channel. So all the lines have come through the channel and they're nice and low. So I've got condition 1, I've got condition 2. I am going to take a buy for 5 pips on the USD JPY. I don't have to do much analysis here. If I see the condition, I'm just going to take it. So USD JPY, I do not have that. So I'm going to go to File, New Chart, open the chart. I am going to make it an hour chart, so it's the same thing. So I'm going to take a 5 pip buy, new order. I'm going to just click the buy. I'm not going to worry about the stop loss and take profit. And then I am going to right click down on the order, go to modify. So this is 5 pips. 5 pips equals 50 points. Click the button, and we're going to use again a 4-to-1 stop loss, which is going to be 200. Click the button, and on this I like to make sure I get the full 5 pips. So if I got in at 57, that means if I add 5 pips to that, I'm going to go to 62, 62.6. And that is it. I would expect this to close within the next hour. On that trade, on the thick orange line trade, some traders like to see, they will actually wait till the, what's going on here? They will wait till, they'll want to see this line. Oh, that's the old one. We were looking at this one. Let's go back. They will wait till the hour changes. So we're in the new hour, and they want to see this number drop by 1. So last hour we were at like 0.3, and now we're at 3.4. So that is good, and I can pull it back and see. So here we're at 0.3. We go to current, we're at 4. So this is eventually going to move. So it's a good trade. So to recap, let's go back. We took 2 trades. One was using a thick orange line signal on the USD JPY. We've got a take profit of 118.626 with a stop loss of 118.390. And then we also took a trade using the 10-point signal on the USD JPY, a buy on the USD JPY with a take profit of 1.26770, and a stop loss of 1.26270. Let's see if we have any questions. We do. Khalid, did they? I'm assuming everybody else can hear me. Microphone is on. Check your speakers. Other people can hear me. All right, gang. We will be back here Monday. Monday, I am working on for a special treat. So if you can be here, I think you'll enjoy it. All right, everybody. We will see you Monday. We're here to help. We will make you good traders if you follow our instruction. And thanks for joining. Bye-bye.